Hello and welcome. You're with us here on Business Today Television. Let's take a look at markets this afternoon, and we are seeing a continued slip. Right now, trending in the red. We've also got Kranthi with us, so let's discuss this with him and understand better what the sentiment is like right now. Kranthi, talk us through. I mean, yes, we know the Adani groups have been seeing a complete meltdown. Is it purely that one factor that's keeping markets, continuously lower, or is there more to it at this point of time? Because again, today, a lackluster day in trade.
Aabha, we cannot completely attribute Adani event and Adani saga towards the market. There are macro level events. There is some kind of weakness with respect to the global markets are concerned. So for India, Adani event has added a double whammy. That's the reason that is transforming the market. And what we are witnessing is the sentiment is weak right now. And technically also markets are trending at a very weak note. We are not witnessing any kind of subsequent buying interest that's emerging in the market, both from the FIIs, domestic institutional investors. And right now what we can see is the retail have over the net buyers in the earlier previous rallies in past 18 months. Right now, what we can see is some kind of volumes are coming down from the retail also. That's where the momentum is losing right now in the market. And that's what we can see clearly evident, the weakness in the market right now. And definitely the market is witnessing, it is a sell on rally. Every time we are going above 18,000 levels of Nifty, we are witnessing a continuous sell-off that's coming in the markets right now. So the sentiment is completely weak right now, and market is waiting for some kind of triggers going ahead.
So, okay, so let's take a look today. I mean, across the board, it's not deep gashes. Metals, of course, are seeing a 3% cut today. So that's one area that's looking weak. But otherwise, it's pretty much even throughout. Banks are mixed, for example. FMCG is mixed. What are the kind of triggers that you will be watching out for next, Kranthi? Would it be any further commentary coming in from the Fed? Would it be domestic factors, such as the oncoming monsoon and some reports around that? What will you be eyeing?
Yeah, monsoon is one of the key things we need to look forward. But whereas how the monetary policy of RBI and the Federal Reserve is going to play an extremely important thing going ahead, and the Q4 quarterly earnings also extremely important. How the impact of the inflation, how the margins of the companies that are going to impact the companies, the earnings are extremely ultimately stocks are slaves to the earnings. If we are not making any kind of earning progress, markets are going to spend some more time-wise correction and points-wise correction going ahead. So earnings are extremely important, and we need to look forward how the monetary policies of central government and the global growth is going to be in the next coming quarters. That's where the lull is there right now in the market. That's where the buying interest is losing in these markets, and we are completely in a time-wise correction right now.
All right. What, according to you, is a fair valuation for the index, given where we're trending at this point of time? And we're nowhere near oversold at the moment, but where do you think we'll stabilize?
Aabha, we need to look forward for the range Nifty stabilizing first of all above 18,000. That's where the first trigger. As long as we are trending below 18,000, you can see the persistence weakness creeping in the market always.
Okay. And what is the strategy that you're looking at right now? Would it be large caps, mid caps? Are you looking at a larger share of, let's say, banks or FMCG or defenses? I mean, where are you looking for value in the market?
About what we can see is, to be on a conservative note, let's stick to the large caps right now. And the market, if you see the saga of events that have been taking place in the market from past 1 year, Nifty have came down nearly 7 to 8 times during this year below 18,000 level. And as and when the market comes below 18,000, there is a persistent weakness we are witnessing. So what the medium to short-term investors can do is, they can buy at dips and they can sell on rallies. That is the strategy one can habituate right now in this kind of market consolidation phase. But the places to be in One can stay the stocks which are in the banking and financial services, consumer front, large cap banks, and also defense also offering a good kind of momentum in these weak markets. So whenever the defense stocks, the high quality large cap defense stocks, which have a high earning visibility, one can accumulate those stocks and they can trade in the medium to long term. To be specific in the defense, one can look stocks like HAL and stocks like Mazagon Dockyard, Garden Reach Shipyard, where recently a week back we had the aviation exhibition, and many deals have been witnessed during this time. So one can cherry pick these kind of stocks which have a high earning visibility. Stocks like Mazagon Dockyard. These stocks are not cheap. They have run up a lot, but they offers a good earning visibility in the coming future.
Okay, fair enough. Just looking at some of the gainers today, Asian Paints, Divi's Labs, the Bajaj Twins doing a fairly decent. Coal India and NTPC are up as well in today's session. Axis Bank, Reliance, Wipro, Ultratech, some of the other gainers in today's trades. So a lot of the heavyweights, Infi, SBI, ICICI Bank, the whole lot is moving up. SBI Insurance is also moving up, life insurance and power grid. So a couple of themes seem to be playing out there for sure in terms of some of the FMCG majors, the power names, insurance names as well. So clearly seeing a little bit of traction on a couple of those names. Asian Paints, is that one that is on your list as well, Kranthi? I mean, it's a preferred name in the markets, of course, but given the current value that we're looking at for an Asian Paints, would you continue to buy into some of these, some of these consumer durable majors?
Our Asian Paints is a stock for all seasons. But one thing is when anyone want to derive extra alpha from a stock like Asian Paints, the entry price of these stocks is very important. So whenever there is a weakness in the market, whenever there is a persistent bad news that hits these kind of stocks, that's the best time one can accumulate stock for a medium to long term. Asian Paints is concerned. Yes, one can have a quality stocks like Asian Paints in their portfolio, given the kind of corporate governance and the visibility of earnings they have. And these kind of definitely market weakness definitely offers a good entry levels for stocks like Asian Paints going ahead for the investors.
Which are the pockets that you'd stay away from? I mean, given the gas that we're seeing on some of those metal names today, for example, or auto hasn't completely really rebounded yet, which are the pockets of the market that would be a clear avoid?
At this point of time, metals can be avoided at this point of time till the time one can get a greater clarity with respect to the growth prospects of the global economy is concerned. And pharma valuations looks very attractive right point of time, but one can have a stock specific approach right now. It is not the gamut of sectors one can avoid Aabha at this point of time. The action is going to be more on stock specific action going ahead.
Talking about stock specific then, let's talk about Adani. Would there be any of the stocks in that basket that you'd pick up at lower prices?
Aabha, you know the kind of wealth destruction what we witnessed in last 1 month. These are high beta stocks. An investor who have a high risk appetite and who have a very deep pockets, they can look for companies like in Adani Pack, like Ambuja Cement, Adani Ports. But there is a persistent weakness. We don't know where the bottom for these stocks. Okay, for example, the Adani Enterprises, it came down from a level of 4,000 to 2017. It touched and it went to the range in past 15 days. It went to 2,000 and now currently trading at the current level of 1,200 levels. So these stocks are definitely suitable to the high risk appetite traders who like the volatility and who have the deep pockets. It's not definitely for not the retail investor who likes the volatility. Those set of traders can take part in the Adani Group shares right now at this point of time. We don't know the bottom for these stocks because there is a continuous negative sentiment in the markets right now. So if anybody want to experiment or if anybody want to take part in the group, Adani Ports, they can cherry pick at this point of time. there is some kind of value is emerging, but still these stocks are definitely for the high risk appetite investor, not for the general retail investor.
All right, Kranthi, thanks so much for joining us today. Treading water when it comes to the index. Let's see how the rest of the session progresses. Thanks so much for joining us.
Bitcoin has crossed $25 mark, dominating the global crypto market with 42%.